NIO stock has been in the news recently because investors seem to be kind of all over the place with this stock, and especially analysts too. I mean, I'm seeing a lot of news on either side saying, you should load up on this stock, or oh man, it's time to sell it all. And so I'm here to provide a little more clarity as to why this stock is getting so much attention and why there's so much polarization between analysts. But investors they've already panic sold NIO. I mean, it's already down. I don't know. Let's look. I think it's down over 90%. NIO stock. No, not their projected revenue. NIO stock. Yeah, I mean, it's already down. Yeah, 92%. It's already down 90%. They've already panic sold. But where's it going to go from here? Let's see. So we know that they're selling their positions and that analysts are downgrading NIO because NIO missed their last earnings report by almost 23%, in addition to have lost almost $3 billion this past fiscal year, which is not surprising. It was expected to lose money, but just not as much money as it did, and hence the downgrades. But NIO has been trading at very, very high multiples for quite some time. And it's not surprising to see that these start to come back down to earth, these valuations. So I'm not surprised that the stock is trading as low as it is. But is it oversold? That's the big question. Is it going to bounce back? Is it going to continue to fall? Let's look. So something to mention is that the whole EV industry right now is having a rough time. There's record high EV inventory levels in the States and also in other parts of the world. And as far as where it goes from here, I mean, at NIO's current valuation at $5.10, with their current price to sales ratio, there's about 2 years of 28% growth built into the current market valuation when you compare it to something like the S&P 500. Which honestly isn't too bad considering the high valuations that we're seeing just across the board right now. But that being said, their debt to equity is an alarming 2.96%. And if they continue to miss these earnings expectations going forward, then there's going to be some trouble. There's going to be lots of room for this stock to fall. And as far as potential investors are concerned, just like a lot of EV stocks right now, I would argue that NIO is a very, very high risk, high reward security right now. And I know I've made videos saying, oh yeah, maybe it's not a bad idea to load up. But that's the thing, is it's high risk, high reward. So it could go really high and it could also go really low. And nobody really knows, unfortunately, which direction that's going to be. But one thing's for sure, it's going to go really far one way, and just nobody knows. So as always, be careful, do your research, and we will have to see where it goes from here.